So it says Pareto Limited is a company in the business of exploration and production of oil and gas in your country. The company reported petroleum profit of 143,600 in the year ended at 1st December 2021. The figure excludes crude oil produced but not sold, valued at 4.2. The following expenses comprised capital and revenue expenditure were deducted in arriving at the reported profit. So we have been given that additional petroleum investment allowance include depreciation of equipment of 378,200. Offshore operation include a tractor purchased at 920 for use on site in your country. Computers and computer software for 780 and 360 respectively for use in your country office. The office were partitioned at a cost of 1480. A statement of computation of petroleum profit or loss and tax payable if any by the company. So this is April 2022. Question number 336. Yeah, so this is Pareto Limited. Pareto Limited statement of taxable profit or loss for the year ended at 1st December 2021. We are using the net profit approach. They reported a net profit of what? Yeah, so reported net profit of 143,600. Salaries is allowed. Legal cost for title deed, is it allowed? So that is preliminary. Legal cost for title deed. So you acquire title deed in advance. You don't acquire title at the end. So the legal cost for title deed. This one is preliminary expense. 562, 400. Then dry hole contribution, that's allowed. Drilling and test development cost. Capital losses again is allowed. Memorandum of understanding, credit, that's an income. Royalties on domestic sales, royalties on export, non-productive rent, custom duty on plant and equipment. Even that one is allowed. Custom duty, that's any form of tax. We add that. Custom duty on plant and equipment, 672. 300. Purchase of asset, purchase of asset, 7840. Then provision for restoration of well, any provision for well restoration, 1575,000. That provision will not be allowed. And then petroleum investment, that is allowed because already that was. But they are saying in note number 1, petroleum investment allowance includes what? Depreciation. Yeah. You have depreciation of 200. That is not allowed. Offshore operation include tractor. That one is okay because it was included. But we shall calculate now the wear and tear on tractor because what they calculated is only petroleum investment allowance. And what else? Computer and computer software. That one, were they included in anything? We shall only calculate the wear and tear. Yeah, I think that's all. First, get the total for that. 900. Can you minus? We have a figure that was not sold, so that one we shall not consider that because it was an income that is yet to be realized. So when you minus, yes, we are adding. When you add, get one. 627,900. So less allowable omitted. Less allowable expense omitted. Allowable expense omitted. And start with wear and tear. The wear and tear. Wear and tear on tractor. 920. 25% of 920. 230. We had the software of 780, and 5%, 195. Then we had what? So this was computer, it was not software. It was supposed to be computer. Then the software was 360, and 5%, 90. And then you have partitions. Partitions of 1480, and 5%, 370. So your total 885, 885,000. So new less, we get what as our adjusted profit, adjusted or taxable profit, 153. So our tax 30%, will give you 46 and 22, 870. That. We're done. So we go to the next, the one for this year, September 2021. Question number 2C. September 2021, 2C. September 2021. The year ended at 1st December 2020. This is Oil Merchant. Oil Merchant Limited. Statement of taxable profit, taxable profit or loss for the year ended at 1st December 2020. Let's start with our profits or our incomes. The incomes, they sold the what? Crude oil. Crude oil exported, domestic crude oil sale, and the prices. But there's an information there, the value of chargeable oil sold as per the audited financial statement. You see that? So that's what we shall use as our measure. Income, what was audited. Yeah. Value of oil as per audited statement. Audited statement. We had a value of 60 million. And we had another income, miscellaneous income. Miscellaneous income of what? 800,000. Do we have any other income? We have income from oil refinery. Income from oil. Income from oil refinery of what? 1 million. Income from oil refinery 1 million. I think that's all. Total will be 61,800,000. Then expenses, allowable expenses, allowable expenses. So starting with the royalty on oil exported, royalty on exports. Exports was 5 million, and the other one for local 1060, 1060,000. Then we have custom duty on plant and machinery essential. So the keyword there is essential. But it is essential, it will be allowed. Custom duty. Capital expenditure shall less that. The what? We shall less the mining allowance. We have intangible drilling cost. Intangible drilling cost. Of what? Is it 5 million? 5 million. Then losses from the previous year. They are allowed. Losses carried forward from the refinery business of 2 million. The other one was from petroleum business of 3 million. Then administrative expense of 8850 included. Above comprised depreciation we don't allow. Stamp duty on increase we don't allow. Loss on foreign exchange transaction, that one is allowed because the gain is taxable. Defending a driver on traffic offense is not allowed. So administrative expense, therefore, our admin expense, we had 8850. I will minus 1,000. I minus 500, and I minus what? 16. To remain with the portion that is allowable. Remain only with the portion that is allowable. So remain with what? 73,34,000. Then what else? Do you have any other thing? I think that's all. Yeah, where they were, and the investment allowance, mining allowance, or petroleum allowance. We are calling it what? Extractive. Where is it? It should be petroleum allowance or extractive expenditure. Okay, so petroleum allowance or extractive. Let me just use that. Extractive expenditure at the rate of 50%. So we had what capital expenditure on petroleum? 19. 50% of that? 95. Total? Because it was the only one there. The previous question, partition, to my calculator rate, yeah? It was supposed to be 10. Change that. It's supposed to be 10. Okay. Then, so get the total for that. That is 33, 0.44, and you minus your taxable profit. That's all. for that question. Let's stop there. We'll attempt the other questions. So that paper has the questions in the handout. Yeah, attempt those questions.